Good evening. Today is August 20th, 2019. My name is Olawale Okabola, Spartacus Trading Corporation, here to bring you the recap and prep for tomorrow being August 21st, 2019, and the recap is just recapping what happened today in the market. Let's start with a recap. All right, we're starting with the profiles for a recap. If you refer to yesterday's recap and this morning's pre-market, I talked about something I call the chop zone and how I was going to apply the balance rules to this chop zone. This morning I talked about it. I said we open, and if we open below or above it, I'm just going to apply the balance rules. The balance rules is either you remain in balance, either you break out of balance and accelerate, or you break out of balance and fail. That's the balance rules. So coming into today, we proposed using this chop zone as an area I'm going to use as a balance rule because in fact it was a intraday balance. Well, in this case, I guess my numbers are off. Haha. Okay, folks, I'm back. I caught myself with a mistake, but I fixed it. All right, it was the intraday balance. We were talking about this high and this low. Once that was established from the 13th, the market pretty much for half of that day on the 13th was confined there. We started yesterday was Monday. We pretty much maintained inside the intraday balance, did not attempt to breach higher or lower. Coming into today, I said I was going to apply the balance rules to this intraday balance. That obviously it means something to someone. We open within balance. Remember the balance rules: either remain in balance, break out of balance and accelerate, whether higher or lower, or break out of balance and fail. And then the destination, just the destination, could be the opposite extreme of balance. So coming into today, I was applying the balance rules to this intraday balance from the 13th. We opened within balance and we broke out of balance. That's a go with trade. On my video, my live trade video, you can review that. You saw me go with that trade, which made sense because we had a gap and we opened with lower value. It was a no-brainer trade once there was a good high. So you watch that trade in A period. Then the market rallied, caught all the shorts, all the folks that were trying to pile on because they were not paying attention to the overnight inventory. On my pre-market video, I talked about the overnight inventory. And then on my live trade video, I talked about the status of the overnight inventory. The overnight inventory was short from the settle. Not only being the settle from Monday, being short, but once it established a high, and this is the European session, the market traded lower. So there was an adjustment to be expected. And then again, on my video, the live trade and the pre-market, I talked about if we break out of balance, I do not want us to come back into balance. Coming back into balance can now activate the short inventory. So nevertheless, you did not get continuation in B period. What you got was an inside bar that balanced and a breakout. That's a go with trade from the inside bar. Most traders were not paying attention to that and they were caught in the short, didn't realize a place to put their stop, and they got caught. And then the overnight adjusted somewhat. At least, yes, it's an adjustment, not a correction. A correction is taking out the high. An adjustment is getting at least back to the settle or the overnight half back. That's exactly what occurred. Then the selling progressed to the downside. So we had a breakout failure, and then the market broke out of balance, this intraday balance again. Pretty much balanced, and then broke. And then once again, I didn't do a live video, but I got on board with the break into the end of the day. So that's pretty much what happened today. Today was tricky in nature, but if you took the time to really, and of course, if you have the profile, you'll be able to see these moves happen and be able to temper your enthusiasm on a break to the downside. I understood exactly why traders got excited because we were coming into a gap. And I didn't think we'll fill the gap today, but the market got pretty doggone close towards the end of the day. So now the market sold off and basically spiked at the end of the day. Okay, so that's what happened today. So that's a recap for today. If you have any questions about that, I talked about it in the pre-market. I talked about it in the live trade video, at least during the A period, kind of what to expect and what happened. So now we're going to do the prep work going for tomorrow's trade, which is August 21st, 2019. All right, we're looking at the monthly bar. We are one time framing down, 1 month. I'm basically taking into account this entire month of August, and I just want to find out where are we trading in the month of August. So I got a half back for just the month of August because we're not in a multi-month balance area. The half back is 29.1750, and the market is trading, as you can see, 29.05 below the halfway mark of the current month of August. What does that tell me? We're trading in the lower section of August, of the halfway mark of August. Very simple. Just gives me a perspective of where we are on a time frame higher than the day time frame. This is the monthly. Moving on. We got a weekly. We're on a weekly chart. We are one time framing higher, 2 weeks, 1 week. This low did not take out the prior week's low, but it took out the prior week's high. We're into this week. Definitely did not take out last week's low as of yet. We did not take out last week's high. We're in an inside bar on a weekly basis, but nevertheless, the market is still trending higher for now. The only thing that will stop the trend on the weekly, the trend up, is taking out the low. So we're one time framing up, 2 weeks. We're in a multi-week balance area. 4 weeks, 1, 2, 3, 4. This week closed within that week. This week closed within this week, creating a 3 week balance area. This week is still inside this week. So we have a 4 week, 3 week, 1, 2, 3, 4, 1, 2, 3, 2 week, 1, 2. We have a 4 week, 3 week, 2 week balance area. And we're currently trading above the 3 week, 1, 2, 3, and the 2 week, 1, 2, balance area half back. We're currently trading above the halfway mark of the 3 week and 2 week balance area. So that just gives me a perspective of where we are in this multi-week balance area. On the daily, pretty simple. We're one time framing lower. We're not in the balance area on the daily. You can be in a balance area if you're going to count all these days, but it's already incorporated in the weekly. So why double down on the work and make things complicated? Okay. We're pretty close to filling this gap. If the market trades back into this range, we'll talk about it, but this range is up on light volume. This is a 29-point range up on light volume. We could get more continuation down. I'm not saying that it'll come all the way down tomorrow, but we could get some continuation down, and then we also got another gap to fill. So something to be aware of, carry forward the information, apply it when it's applicable. Let's go to the profiles. Now to the profiles, we have clearly lower value. It's pretty much a balanced looking profile once it's collapsed with a spike. So we got a spike base right here. What we want to apply going into tomorrow is what profile theory calls the spike rules. Spike rules is basically just this, plain and simple. We open below this spike base, then prices are being accepted, or at least initially accepted, for when the market spiked lower. If the market opens above this spike base, the market prices down here was not accepted and the market's trading lower. Now, how do you understand whether or not something is accepted or rejected? Value. You see this yellow border? That's my value area. I want to see where does value develop in relation to this spike base. Is it lower? Is it higher? Plain and simple. That will let me know whether or not prices are being accepted above or below this spike. So coming into tomorrow, we're playing the spike rules. That's the spike rules. Now, this is a 27-point range. but this, and we closed near the low. However, it was on light volume, 3.2 billion New York Stock Exchange volume. That's very light. Traders, non-thinking traders, they would say that we closed near the low. We got to get that. We're going to get that gap fill. Bring in the overnight. Let's do this. So traders say we close near the low. Non-thinking traders, we close near the low. We're going to fill that gap. They're going to stay short. Well, they're right. Perhaps provided they exit their trade in the overnight, because now the market's moving up in their face. Why? Light volume coming down. Also, if we get above the spike, we have some anomalies. We have a prominent point of control, and we have some more anomalies going up, showing that the market really wasn't trading on its own. Now, that's not to say that the overnight comes up, and then we come back down, and then we can possibly fill the gap during the daytime, during the pit session tomorrow. So we just want to be aware. Be aware. Overnight inventory conditions. That's going to play a factor in what the market does. It's going to tell you a lot going into tomorrow. So what do we got going into tomorrow before I end this video? We basically want to apply the spike rules. I've already talked about the spike rules. If you're not certain about the spike rules, please replay the video for the explanation on spike rules. So we're going to watch overnight inventory. We're going to see kind of what happens. This is the Asia session. We're going to wait for our Europe session to do its thing, and then we come into the New York pit. Based on the inventory condition, I have a better idea of kind of where the market's at inventory wise on a daytime frame inventory, not weekly, not monthly, because we got a good handle on what's going on the weekly and the monthly. The monthly's down, weekly's up, but in the multi-week balance, daily is down. So we want to see what in the shortest time frame, kind of what's the read on the overnight inventory, and based on that, we can begin to make some trading decisions. So with that, I'm going to leave the video right here. Play spike rules going into tomorrow until further information, until the market gives us further information. So based upon that, this is Olawale Okebola, Spartacus Trading Corporation, where serious advanced traders come to train and learn. Have a good night, everybody.